morning, everyone. This is Ryan Edner with your Wednesday, May 1st morning market commentary. We're going to start off in corn, and we're going to start off right away talking about the weather maps, the way we have been doing for a couple of weeks now. Looking at this first 1 to 5 day weather map, we see that the current weather system that's been moving through the Midwest is pushing off to the east, still dropping plenty of rain for the eastern corn belt. Drying out the western corn belt pretty decently here for a couple of days. But still, with how much rain that's fallen, it's unlikely too much progress will be made in this short 2-3 day break that the western side is seeing. As we flip over to the 6 to 10 day map, we see wide scale coverage of rain once again. So the question will be whether that 2, 3, maybe 4 day break that the western half of the corn growing areas is enough for a few, if any, planters to get moving, because this 6 to 10 day map again does show pretty wide-scale, moderate to heavy rains again, not offering the best planting window that we would like to see. So corn has seen a little bit better support than we might give it credit for. In fact, yesterday, July corn being up 3/4 of a penny is actually quite solid, with beans down 6 3/4 and wheat down 6 1/2. So this is the second day in a row we've seen this, where if you just look at the corn trade and you see how it finishes, you think, why isn't trading these weather maps? But again, if you see corn at all in the green with the other two grain markets heavily into the red, it is, again, better support than you would think just by staring at the screen and seeing the daily change. Finishing it all in the green with those other two markets lower is an accomplishment. Overnight, the wheat is easing up on some of its selling and actually in the green as the recording of this video. So if that continues in the day session, it could allow for a little bit easier of a corn bounce reacting to these weather maps. Over in beans, interesting situation here. We are seeing open interest drop, which does continue to suggest that trading funds are letting go of some of their significant short position, yet beans are going down anyway. One possible theory here is that while the trading funds are letting go of some shorts early in the day, the index funds who are long are still liquidating their position. That would be a way to justify the fact that open interest continues to drop, yet beans continue to drop. So if index guys are still letting go of their positions, that will continue to pressure this bean market. We'll have to watch that closely on Friday's Commitment of Traders report. Do we see the trading funds exiting, but also still seeing the index funds as exiting their longs? That'll be a big question here. And given that this is the start of a new month, we'll also have to see if any of this fund trading pattern we've seen over the last 2 weeks, does it change given that we're into the new month? Now, sometimes that happens, sometimes it doesn't, but it will require a little bit closer watch today than we would give it on a normal day. If beans can find a bounce, there's plenty of chart room. The very first resistance would be the 20-day moving average. That's not found until 892 1/4. And then for more sizable resistance, where we actually expect a larger number of sellers to step in, it'd be the downtrend line. And in July, that's 917 1/2. So again, if we could spark a bounce, the charts allow for a pretty sizable bounce in these beans if we could just find the news to get it going. Over in wheat, like we mentioned earlier, overnight did ease up on some of the pressure. Maybe they're expecting some of the fund patterns to change in the wheat here today. We'll have to wait and see until 8:30 and see if the funds come in and put a little bit more pressure on the wheat. We also can't get around the fact that the good to excellent rating is 64%, which is 19% over the 5-year average. And we're also freeing up. If you look back on those weather maps earlier on the video, you'll see North and South Dakota, they've missed some of the rains lately, and they don't get the heaviest rains in the 10-day outlook. So maybe some spring wheat planting can see some pace here over the next 10 days. Moving over to cattle. We already have a cash cattle trade yesterday of 123. That's $3 lower than last week, and that's our first trade on a Tuesday. Following the 123 trade, we're already hearing talk that packers are already starting to pull back their bids. So there's already thoughts that 123 to start the week might be our highest trade, and perhaps we could see cattle trade another dollar lower here today. So we'll wait and see if that pans out. And looking over at the cattle market, we know June has fallen hard. In fact, $8.75 without even hardly any portion of a bounce. So There's a lot of people saying, well, this thing's bound to have at least a technical bounce. And again, if we can find some news to spark that bounce, we wouldn't argue. Looking over at the cattle, even a 38% retracement bounce would be a small technical bounce, would get the June back up to 117.50. But first, we need to find the news to spark that bounce, and then sure, we'll look for that. For maybe a 117.50 bounce in the June, but our downside targets are still lower. So if we find a small technical bounce, short term, we still look on the longer term outlook for cattle to move lower than where we are even today. So that's our quick outlook here for Wednesday, May 1st. If you have any questions, give us a call, 800-551-4626, or visit us on the web at allendale-inc.com.